Some analysts have been using the bubble word for months. Is the question now when, not if? Joining me in New York is Jamie Metzl. He's senior fellow at the Atlantic Council. That is a think tank in international affairs. Jamie, it's great to see you. And you and I have talked about the volatility in these markets for some time. Are we reaching a level where it is inevitable that we see this burst? And what are the consequences of that?
Well, it is absolutely inevitable that this bubble will burst because gravity at the end of the day applies. There's no way that we can justify that valuations for companies in China's stock markets are 3 times the valuations in terms of price-to-earning ratios of any other stock market. So it will come down. Unfortunately, when it comes down, the people who are going to get hurt are the little mom and pops. There's 80% of the new investors are retail investors, and 2/3 of those people have less than a high school education. So these are the people who, when it pops, are going to be hurt.
So that sounds to me like maybe the possibility of, you know, a global contagion is limited because of that. And tell me if I'm wrong. But are there political implications within China if you have all these I mean, you would have protests on the street if that happened, you know, in the U.S.
Yeah. So 2 questions. First, in terms of the international implications, the danger is that the amount of margin lending, which is money that's lent in order to invest in the stock market in China, is now 5 times what it was a year ago. And because of that, when the bubble does pop, there could be some institutional contagion within China, but China has huge cash reserves, and so they would probably be able to address that. But there's a real political issue in China because the big players will be okay. One of the reasons for this bubble is that the Chinese government has talked up the stock markets as, in part, a way of helping companies that have huge amounts of debt transfer that debt into equity. So these companies, in many cases, will be better off. They are, I'm sure, busily diversifying now. But when the bubble pops, it's the little guys who are going to get hurt. And that is the biggest problem in China, is the misallocation of every resource, including power, because of their political structure. And so when these people on the bottom keep getting hurt, that will create political problems for the people on the top, and particularly the Chinese Communist Party.
And are these political problems that they can manage? I mean, we've seen in other areas attempts to do that. Will they be able to also manage this?
Well, it's not by accident that China spends more on domestic security than on international security. They spend more on their policing than they do on their military. And so the people on the top have a structure that allows them to get disproportionate advantage from the system. And there are many people who are unhappy because of what's happening in property markets, where a lot of land has been confiscated, because of pollution problems. And every problem that you see in China, you can trace it back to the misallocation of resources, which comes from the very nature of their political structure. So yes, people will be upset. Yes, there will be problems. But it's going to take a lot to change that superstructure, which is the source of all of this, in my view.
Yeah, and that is something that people, you know, put out as a long-term challenge for China as they try to transition to a different kind of economy. Jamie, part of the reason you have all of this money sloshing around, it seems like every time officials try to sort of either lower rates or flood the market with liquidity to try to ease that slowing, to try to cushion that slowdown in the economy, you get the money running into these hot places. And then when they try to tap down that excess speculation, then you're not able to address the growth problem. Can they deal with both of these problems at the same time?
That's a huge problem because the Chinese government, more than anybody, knows that they need structural reform to get their economy to be more balanced. At the same time, the government has a legitimacy problem because they don't have legitimacy that would come through democratic elections. And so the deal, essentially, that the Chinese government has with the Chinese people is that we will continue to drive economic growth as long as you let us rule. And every time there's a slowdown, there's a little bit of a panic. And whether it's having more bank loans or now pushing equity investments, there's this constant process where they know they need structural reforms, they know they need to slow the economy in some ways to get it, but they can't do it because their legitimacy rests upon driving economic growth.
So, Jamie, you laid out really well the fact that you ought to be pretty nervous if you're a small mom-and-pop investor caught up in some of this market volatility. What about more sophisticated investors who are sitting on the outside? Anytime you see a market correction like that, you think, maybe it's time to get in. Would you be nervous about the market even with the losses that we've seen this week?
I would. The Chi-Next market, which is this small cap market, and that's the most speculative, it's up 300% over the last year. Shanghai and Shenzhen are up about 150%, so the valuations are still high. But having said that, the A-shares and the big banks and kind of the Chinese blue chip stocks, those haven't had the kinds of run-ups that these other companies have had. And so if and when there is a pop of this bubble, if those shares go down, there could be some buying opportunities for smart institutional investors.
That's a really good point. A lot of these stocks, as you rightly point out, are some of the momentum stocks, and we know right. that story well. Watching things here in the U.S. over the last couple of decades. Jamie, always great to catch up with you, and we so appreciate all of your insight. Jamie Metzl for us this morning.
Thank you, Maggie.